America's fiscal crisis is no longer theoretical. Ballooning debt, exploding interest costs, a looming commercial real estate bust, and a weakening labor market are converging. The dollar's decline and silver's breakout are not coincidences. They are the market's verdict on years of empty promises. The floodgates are open, and unless policymakers act decisively, the coming storm could redefine America's economic future. Folks, thank you for tuning into your daily silver news. If you want the latest information of what's happening across the globe and how that affects the price of precious metals, then make sure you click subscribe. And by doing so, you also get a chance to get silver shipped straight to your front doorstep for free, just by clicking subscribe, because I'll be doing a silver giveaway soon. So also make sure you click the bell so you get notified when the entry video is live, and may the luckiest stacker win. And if you were looking for a safe, reliable, trusted place to purchase your precious metals from, I have the best company for you. Miles Franklin. Andy Scheckman is the CEO. They have weekly specials. Just send an email to info@milesfranklin.com. Let them know Slayer sent you. They'll hook you up with a broker. They'll send you a price sheet. You could ask what the special is this week. And it's just a great company, very trusted. And I know that you guys will have a great experience with them, and Andy always loves to hear your support from me as well. We'll be doing our next show on Tuesday, so stay tuned for that. info@milesfranklin.com. Let them know I sent you. It helps me out. If you want to support the company and support myself, I appreciate it. Now, this article came out Friday. Silver skyrockets as U.S. debt bomb explodes. Dollar plunges, jobs vanish, and crisis looms. What a headline. But it's not even exaggerated. I mean, this is all actually happening. We're seeing silver at 13-year highs. Debt bomb explodes. We're talking about a dollar plunging, jobs vanishing. We'll be going over the jobs chart. It's real. The crisis is looming. It's not going anywhere anytime soon. I mean, that is a realistic headline just to put into context of how crazy times are right now. And it's only looking like it's going to get worse. And as it gets worse, that is more bullish for silver. And with not much resistance between $36 to $50, because this is the first time we've been here since been at $36 since it was $50 in 2011. The sky's the limit. I mean, think about that. If we would have hit 38, 42, 48 over the past 10 years, 11 years, then yes, there's still more resistance ahead, but there's not. The last time silver hit $36, it went to $50. That was the last time it was at 36. So this is big, especially given what's happening across the world and how much more support that gives this bullish breakout or this potential rally. So with that said, let's jump into this article. Silver surge in America's fiscal reckoning. The price of silver blasting above $36 is more than a technical breakout. It's a blaring siren for the U.S. economy. For years, politicians have promised spending cuts and deficit control, but the numbers show these assurances were little more than political theater. Now, as precious metals rally, the hard reality of America's fiscal mismanagement is coming due, with profound implications for the markets, jobs, and the dollar's global standing. So we have debt and interest, the unstoppable climb. The U.S. national debt, this is crazy by the way, is on a runaway trajectory. If you go to usdebtclock.org, it shows a live counter of the national debt. So as of right now, the U.S. national debt is $36,953,150,000,000. Debt per citizen is $107,873. How many millionaires? There are 23,557,830 millionaires in the United States. U.S. drug deaths is 116,278. There's 713,487 homeless people. And this is a very interesting one. Border encounters in 2024, when Biden was in office, was 1,786,107 people. Now, in 2025, there's only 86,709. That's a 95.16% change It's down 95%. US trade deficit with China's 307 billion, $351 million. Wow, that's a big one. That's actually really interesting. So yeah, there's a lot of very interesting statistics on here. USDebtClock.org if you want to check that out. But anyways, let's move back to this. So by the end of 2025, the debt to GDP ratio is projected to hit around 10%, with forecasts suggesting it could balloon to 148% by 2034 if current policies persist. The real kicker? Interest on that debt. In 2025, net interest payments are projected to reach $952 billion, nearly tripling from a decade ago, and now surpassing spending on Medicare and defense. Over the next decade, and we can track this, by the way, on usdebtclock.org, it shows Medicare and it shows defense. So over the next decade, interest payments alone will total a staggering $13.8 billion. This is not just an accounting problem. Nearly 1/3 of all U.S. marketable debt will mature within the next 12 months, exposing taxpayers to the risk of refinancing at even higher rates. As a share of federal revenue, interest payments are expected to hit 18.4% by the end of 2025, eclipsing from the previous record set in 1991. This means nearly $1 in $5 the government collects will go just to service debt, crowding out critical investments in infrastructure, education, and social programs. Commercial real estate, the next shoe to drop. Layered atop the debt crisis is the brewing storm in commercial real estate. In 2025, a wave of commercial real estate loans is maturing. Loans that were issued at rock bottom interest rates and must now be refinanced at much higher costs. Many property owners already struggling with post-pandemic occupancy and revenue declines face the prospect of default or distressed sales. This echoes the financial sector's risky behavior leading up to the 2008 crisis, when excessive leverage and falling asset values triggered widespread defaults and a credit crunch. Now we have jobs, a troubling labor market shift. The jobs picture, often touted as a sign of resilience, is flashing warning lights. The latest report shows a staggering drop in full-time employment, down by 623,000 workers. This is not a blip. It signals a shift towards part-time and precarious work, undermining household stability and consumer spending. Such a decline in quality jobs is often a precursor to broader economic weakness, especially when paired with rising debt and financial instability. Now, Geiger Capital tweeted this, surprise, surprise, March jobs revised 185,000 to 120,000, down negative 65,000. April jobs revised from 177,000 to 147,000, down 30K. 13 of the L16 have been revised lower. So the dollar slide, policy or accident? The US dollar has broken below a critical 17-year support level against the euro and is down sharply against major global currencies. Since 2025 began, it has lost 8% versus the yen, 9% against the euro, and 13% against the Swedish krona. The collapse is even more dramatic against the Taiwan dollar. While officials deny intentionally weakening the dollar, the market participants see the administration's focus on tariffs and reducing trade deficits as tacit acceptance of weaker greenback. A weaker dollar may help exporters, but it also signals eroding confidence in the U.S. fiscal stewardship and accelerates the flight to hard assets like precious metals. Definitely that last sentence accelerates the flight to hard assets like precious metals. Right? You're putting your money into something that holds its value as the dollar is collapsing. Silver's technical breakout. So technically, silver's surge above $36 is significant. There is little resistance between 35 and 50, meaning the path is clear for further gains as investors seek refuge from fiscal and monetary uncertainty. The rush into silver and other precious metals is a direct response to the realization that Washington's talk of fiscal discipline was indeed a bunch of BS. Here's the conclusion. America's fiscal crisis is no longer theoretical. Ballooning debt, exploding interest costs, a looming commercial real estate bust, and a weakening labor market are converging. The dollar's decline and silver's breakout are not coincidences. They are the market's verdict on years of empty promises. The The floodgates are open, and unless policymakers act decisively, the coming storm could redefine America's economic future. So, folks, there you have it. If you're someone who's on the fence that might still be wondering if precious metals is a good idea, or you want to go into something else like crypto, the only real way to take control of your wealth is by putting it into something that is tangible, that you can hold. I always say, if you can't hold it, you don't own it. You think you do, but you don't. Even with paper silver, all those contracts on the COMEX, those people think that their silver is stored away in some vault somewhere, but there is not that much physical silver. And if everyone tried to turn those contracts into physical delivery, it would expose the corruption. That is how they actually suppress the price. So hold it yourselves. Maybe bury it in your backyard, or get rent a storage locker or whatever. But you are in complete control when you can hold it. And you do not want to be a victim of this crashing financial system where the dollar has already lost 98% of its purchasing power, and we are headed into a direction where something big is about to happen. And unless you have precious metals, or unless you have your hard-earned money into precious metals, fake money into real money, you're going to be screwed, right? That's just simple as that. So, folks, if you wanted to purchase some, you could email info@milesfranklin.com. Let them know Slayer sent you. They'll send you a price sheet. They have several different payment methods. It's a great company. Huge amount of a variety of silver. Their inventory is massive. They have everything and anything you could possibly think of. And yeah, just if you want to support Andy and myself, then hit them up. Appreciate it. Also, make sure you subscribe. Thank you so much for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.